The fallout from Silicon Valley Bank's demise has several technology implications, from startups that may have problems getting future financing to enterprises wondering whether their supply chain is secure. Plus, is a superconductor breakthrough the key to achieving a better electric future? Next up on Today in Tech. Hi, everybody. I'm Keith Shaw. Welcome to Today in Tech. We're going to try to catch up on some of the news. It was big news and a lot of tech news last week. So joining me is Chris from Behind the Computer. Hi, Chris.
Hey, what's up? How's it going? This is going to be a good one.
Yeah, at first when this news came out, it did. This is all about Silicon Valley Bank that we're going to start off the show with. It felt like, it's a bank story, it's an economy story, it's a business story. Yeah, somewhat interesting, but like maybe not having a lot of tech implications. But man, did we find a lot of technology implications? Only because the big main concern was that Silicon Valley Bank was the bank. If you were a tech startup in Silicon Valley, they had a great reputation. They funded so many startups, and so if you follow sort of that startup culture and the Silicon Valley and all of the innovations that come out of that, it's got some major tech implications. But before we jump into some of those implications, let's sort of go over sort of what happened. So there were several combination of factors that caused this sort of snowball effect. So Chris, what were some of the stuff that you knew about this bank?
Right off the bat, the economy isn't doing so great to begin with.
Right.
So that was a big factor. Financial report last Wednesday showed a $6.8 billion loss for the fourth quarter of 2022. Yep. That's huge.
Yeah.
And then on top of that, a lack of capital to meet regulatory requirements and customer withdrawals.
Right. So let's go over this too. So we're gonna start with this one. The reason that they had this financial report was because so they had a lot of money that was tied up in U.S. Treasury bonds.
Right.
Okay. So, and the reason they did that is because when you're a bank, you take in money from depositors. You don't hold the bank. It's like the bank doesn't have a hole in the wall. They do have a vault, but they don't put all your money. They take the money from the depositors. They give that money in loans, or they do they do what Silicon Valley Bank did. The reason that they didn't, there was another reason why didn't they just loan out this money so that you could get interest, and that's how you make money? You give me money, Chris, I then give it to someone else as a loan. They pay me back with interest. Now I have more money and I can run my bank. Right. Multiply that by 1,000, 2,000, 5,000 people. Now I'm making money by taking money in and lending it out to other people and getting the interest. Okay. A lot of the Silicon Valley Bank's depositors were not asking for loans. So in a typical sort of tech startup culture, they would be financing through loans. Instead, they were getting a lot of money through other sources, venture capitalists. There was a lot of money that was coming into the bank, but they didn't have the ability to loan it out.
So basically, they weren't doing anything with the money. They weren't getting any
So the alternative
profit from that money.
So the alternative, if you've got all this money, the alternative as a bank is to go invest in other things. And so sometimes you'll see banks invest in crypto. Sometimes you'll see them invest in other stocks. They'll invest in other companies, and et cetera, et cetera. What happened here with Silicon Valley Bank is they went to the government and they bought these treasury bonds, which in theory, economic theory, says that treasury bonds are a safe alternative. It's because, again, it's got the backing of the government. Here's where the problem happens. They bought all this money in treasury bonds, and then the Fed, the federal government, the central bank started raising interest rates as a way because of the inflation issues that were going on. Right. So inflation was going up. So they raised the interest rates to try to sort of stem the tide of inflation, because then you're not going to be loaning out any money, and you're going to loan out less money because the interest rates are going to be higher. And sometimes people don't want that. But the same thing with a savings bond and a treasury bond, you're now, instead of a 4% return of interest here, you're now talking about 5, 6, 7, 8%.
So you're at a loss.
And so any bonds that you bought at this lower level, the value is less. And so if they try to sell these, they're going to take a loss, because why would I sell you if for example, if I was selling you a car and I tried to sell you the car and I bought the car in 2010, but you can get a better car for less money or the same amount of money in 2020,
Yeah.
You're going to buy the better car. You're going to buy the thing that gives you more money down the road. So if you buy a treasury bond now at 9%, why would you ever want to buy mine at 4%?
Well, going back to what you said about the Fed raising interest rate, I think Ben Shapiro from the Daily Wire described that as a catch-22.
Yes.
So you're kind of stuck. You can't really fix it, right?
Right. The bank, they can't. If the Fed continues to raise rates on interest rates, you're going to start seeing more and more of these banks potentially go under, and that's going to snowball. But then, if you don't raise interest rates, then inflation is an issue. That's a whole other sort of go listen to. There's a billion podcasts about what's going on here, but. So that was sort of the first couple of dominoes that started falling. So people start finding out about this, and
social
media, and you start getting a digital bank run, which was basically accelerated by social media platforms and online chat groups, where some prominent venture capitalists, other startups, and other large inventions started typing on their Twitter machine and saying, "Oh, we've got to get our money out of Silicon Valley Bank."
Yeah. Now, so then everybody pulls out all at once.
Right. So in the old days,
because everybody's saying it's the right thing to do, everyone should do it. All the banks aren't safe, yada yada yada. So yeah, of course we're going to see more banks go under because everybody's pulling out.
Well, okay. So before we get to that point, we're not going to try to create a panic here.
Right.
But in the old days, now again, this is maybe like 1920s. This is the big Great Depression crash of the 1920, 28, 29, the stock market crash. People started panicking about that, and in those days, if you heard about the bank's got no money, you would have to drive to the bank, wait in line, and then try to get your money. Okay, so bank runs back in the day were non-digital, so it would take a couple of weeks. Or maybe a couple of days where you started seeing these long lines, and the bank would then have enough time to then try to secure a loan to start, because what a bank could do is they could say like, well, we'll just buy a loan, or we'll get a loan from a bigger bank, or we'll get bought by a bigger bank. Then we'll have all this money, we can give it to the depositors and no one loses their money. It was the whole reason that the Federal Deposit Insurance Corporation was created, was because there were all these banks that didn't have the insurance to back up these loans. And that's why a lot of those banks went out of business.
Right.
The whole movie, It's a Wonderful Life, which you admit you never saw.
Haven't seen.
But it's about a bank that's about to go under, and all the townspeople are like, "Where's our money? Where's our money?" And there's the whole, well, it's in your house, it's in your store, it's in this is where and anyway, don't worry about that. So what happens now with Twitter and with online banking apps and the ability to transfer money super quickly, and the power of social media to basically inform people of when something has happened.
Yeah.
You took a 2-week process in a typical old school bank run, and you compressed that into
couple days,
24 hours.
Yeah,
it was
a day or two, like super fast.
This was like last Wednesday. So Wednesday was the 8th. That's when the report came out that we're like, we've lost a lot of money because we had to sell our low interest rate T bonds or T-bills, treasury bonds. The 9th was a Thursday. That's when I think a lot of people started going, holy crap, this is something going on. The 10th, a Friday, the government steps in and says, we're taking over the bank. And then over the weekend, then the government said, well, all right, we're going to cover those depositors. That, because again, now the second big problem for this bank is that a majority of the depositors were all tech startups. Yeah. So this bank was known for, hey, if you're going to be a tech startup in Silicon Valley, go with this bank because they cater to that crowd. So they would hold networking events, they would hold all of these things. And if you wanted to find out, who are the people that have a lot of money that can fund my startup,
right?
These are the people you have to meet. And it's part of the Silicon Valley culture, but again, so one of the problems that they had was that they were never able to sort of diversify and go find depositors that, maybe made corn or widgets or something that wasn't necessarily risky, tech startup
or risky. Because startups in general,
right.
That's a pretty risky thing to invest in.
Right. And the fact is that a lot of these startups, I think the FDIC limit is $250,000 is automatically, that's sort of automatically insured. Anything beyond that, So a mom and pop, might not have that $250,000. I do know, like a friend of mine who does run a tech startup actually was part of this whole thing, and he was under the 250, so he wasn't really worried.
Yeah.
But the problem is that he had sort of payment systems that were connected to the bank. So as he was charging people, he charges via Stripe. Like that payment wasn't going to go through because they had basically frozen everything.
Oh, wow.
So he couldn't. So he had to figure out, well, could I shift this to a different bank account? And he has a couple of different bank accounts, which is good as well. But he had a fun weekend. Let's say of like trying to figure out. And speaking of weekends, so this also happened during South by Southwest, which is the big sort of, they call it quote unquote geek spring break, which is where, all of these people, they go down to Austin, Texas, and they have a big party. And, there's a tech show, there's a film show, there's a music show. The tech show was last weekend. And usually you typically get a bunch of startups. And again, they're trying to network and kind of do all this stuff. But this happened again last Wednesday, Thursday, Friday. So it was the start of this whole geek spring break and fun and partying and drinking and all this stuff. And meanwhile, everyone's probably checking their phone going, we might not have money. We should probably not hold this party because we have to pay our bills and we have to
Everybody's
pay our employees.
on their online banking app and pulling money.
And they were locked out. And so like that would put a real damper on some of the parties that people were going to.
Oh, yeah.
Yeah. So I'm glad I didn't go. I'm not a big fan of South by Southwest anyway. I went once and I wasn't in with the in crowd, so I didn't get to any of the cool parties. Plus I don't like breakfast burritos. All right. So we've already established that they had a kind of a fragile customer base that, again, it was this whole tech and lack of diversification. So now so you're probably asking me, hey, Keith, what does that really mean for just this guy who's interested in technology and just wants to talk about it? It does have a couple of implications. And I think the first one would be if you were a startup, you've learned some valuable lessons about where to put your money, like maybe not have all of your eggs in one basket. What are you doing there?
It's just someone on Twitter, they said their cards logged, ATMs logged. That was during the South by Southwest.
Yeah.
Yeah, that's crazy.
Yeah. So in terms of future funding and how a lot of these startups are going to have to operate, like maybe find some better banks to be with, and maybe something that's, maybe look at spreading that money around a little bit. Again, it adds more complexity to the issue, but I think a lot of these new tech startups are learning some lessons in business.
Do you think like smaller banks would be a better option? Or
I think it would be a mixture of bigger banks and smaller banks. I mean, I think this was a pretty big-ish bank, but not a big bank like Bank of America. And again, one of the appeals I think were some of these banks were because they were, maybe they had an online component that was better than a typical Bank of America or, some of these Wells Fargo type banks. Or they were the VC, the venture capitalist that's giving you $6 million for your brand new startup idea. He's like, yeah, just put your money in Silicon Valley Bank because that's what they've done for the last 10, 15 years.
Yeah.
They're
just used to it.
Or at least start talking to your bankers and going, all right, what's your risk management strategy? And, how are you going to basically be able to give us our money if we need it, type of a thing. So that's the first lesson. So I think tech funding is going to change in the future. Now, this would have been a really big disaster if the federal government did not decide to bail out beyond that 250,000, because then you would have seen a lot of tech startups where you're like, well, we can't pay our bills now. We can't pay our employees, and you would start to see maybe some more startups going under, and that would snowball as well. But I think that they sort of staved that off for the moment. It depends on what ripple effects this has on the global banking industry, and so we're still too early. It hasn't been a great week for bank stocks as well.
I mean, if anything, like you said, it might just change like the banking strategy going forward,
right?
Like for other banks who haven't gone through this.
And then what we're also seeing now is the Wall Street Journal is also reporting about enterprises, because obviously larger companies, they might not have had money in Silicon Valley Bank, but this is now putting pressure on the enterprise tech pipeline. Maybe if you were an enterprise that, maybe you bank with Bank of America or Wells Fargo or a bigger bank, that's not the issue. But the issue is, well, what if I used one of these startups as my vendor? Like what if this startup that is making this cybersecurity software that I've been using successfully, and I like the company, but they might not be around next week. There was a quote in that story. I don't know if you can find it. It was like, this is a real wake up call for, like, they might not be there next week or next month. If that's the case, then you're like, well, then I got to find an alternate software product, or I got to find, because again, a lot of these startups sometimes do go belly up pretty quickly. I know there's a lot of enterprises that probably don't do a lot of work with startups, but I think startups tend to work with other startups. So, yeah, it's going to be an interesting sort of fallout from that. Like, you might see more conservative companies sort of pull back in terms of their willingness to invest in a startup, which then has a ripple effect as well, because now,
right.
Most of the companies that come out with really innovative stuff are typically startups, right?
Yeah. What do you think the effect is going to be on, your average consumer or, bank customer, right? Like me, you, what do you think there's going to be any kind of...
Do you have more than $250,000 sitting in a bank account somewhere? No, neither do I. So I think,
but you never know. You never know. I mean,
I think that the FDIC is still probably solvent enough where I think you're.
So we all don't have to think about maybe like rediversifying too much or pull out all of our money out of our banks.
I mean that's a panic mentality that I don't think that I mean, people think about that, but. Again, the safety net that the FDIC has created, in theory, would protect you from that. Like, I always think, whenever the lottery, like Powerball or anything like that, gets over 6 million or whatever the number is, I was like, okay, I'm going to win the Powerball, and if I did, I'm going to have to put my money into 20 or 30 different banks, because I'm not going to put it in one, because then it's not insured.
Just put it in a treasure chest and bury it in your backyard somewheres, and no one will know.
Sock cans. There's plenty of places where you can put the money. Yeah. But you ever see, again, this is a little bit of an offshoot, but do you ever watch those stories or see those documentaries where you get like a celebrity and they're suddenly in financial trouble because they've put their money with a money manager or someone that then is either embezzling money or they just make bad investments. Like, it's like I scratch my head whenever I see that type of thing. It's like, I suppose if you're a celebrity, you don't want to worry about the money. But if I suddenly became super famous or won the lottery, I would become really interested and knowledgeable about sort of money management, because I don't want to lose that money because somebody maybe they get conned into, the investing in something, and it's a scheme, or it's a con. Like the crypto stuff, like the SBF. Was that it? SBF?
I don't remember the
FTX.
FTX.
The crypto. Yeah,
FTX.
Yeah. It was Sam Bankman-Fried who they called SBF. All right, that's where I was getting confused. So, remember that FTX was a big, like, they spent all that money on the Super Bowl ads, and they got Tom Brady and Gisele Bündchen and a bunch of other.
It was all great.
It was great. Yeah. Hey, why aren't you in yet on crypto? Crypto's the way, and I think they were paid a lot of money, but I think the money they were paid was in crypto. So technically they didn't get paid, but they're getting sued. A lot of them are getting sued for trying to promote this stuff. But while they also lost money. And you just start thinking about it. It's like, why did you fall for that? But I don't know. I'm not a celebrity, and I don't have any money. So I think to answer the long answer for that general question about what should regular people do is, if you have more than $250,000, I would split that up into different banks. And then sort of just, I think it's not time to panic yet. If we were going to panic at this point, we wouldn't even be on this show. We'd be like at the bank with our ATM, which is even an old thing. I'd be like trying to transfer it on my phone.
Right.
All right. So, but I've also heard, the conspiracy theorists come out, and there's some talk about, well, the speed at which these sort of social media, outbursts and things like that mean that we need to start regulating whether or not people can cause a panic, or, it's that old, is this really free speech if you're telling people to take all of your money out of the bank? Is it the same thing about running into a theater and yelling fire? Because again, that causes a physical panic. Mm-hmm. Should we look at ways of sort of regulating that? And that opens a whole other can of worms that I don't think that the world really needs at this point.
Yeah, well, scary thing about that is I think the government will create their own currency. Like, you know what I mean?
Yeah, I'm a little fearful of that too.
Fed coin or Gov coin. I don't know.
Yeah. Although I will admit I don't carry as much cash as I used to.
I mean, does anybody anymore?
I don't think anybody does. I mean, I probably carry it more than maybe your typical 20-year-old.
Yeah.
Because they're doing things like Venmo, and they're just passing money around via app.
All wire.
And what?
Wire transfer.
Well,
Venmo.
yeah. That's what Venmo is.
Yeah, it's just all wire.
And it's like, okay, well, it's convenient, but what happens when that digital thing goes down, or if it gets hacked? And I mean, I think there's a general feeling that because the nature of the internet is decentralized, that we're okay. But I worry about, like, sometimes
all that needs to happen is just, I don't know, the electrical grid goes down,
yep.
Some 4G, 5G towers go down, and then you're kind of stuck.
Right.
You're kind of stuck. So I think, it's still good to have cash on hand.
Right.
Know?
And now we're going to start sounding like we're going to be living in a bunker somewhere, Chris. This is what happens when I hang out with you.
Well, you haven't seen my bunker? I got to give you a tour.
You do definitely. Definitely look like you have a bunker somewhere.
No bunker.
No bunker yet? Well, after, there's going to be some episodes where we're going to be talking about that kind of stuff. We may have to start building one. Hey, there's plenty of space in the office here, like in the studio. Maybe we just start creating a bunker right over there.
Actually, that's not a bad idea.
Yeah.
A lot of empty cubes, kind of fortify them with steel.
We start building
concrete.
little forts out of the cubicle walls, and,
Yeah, true.
I'll bring in pillows and blankets, and we can add like a pillow blanket fort type of a thing. All right, where are we? Oh, I want to talk. So speaking of electrical grid and energy stuff, there was another great story, and this is a real positive one. I'm glad when we can find positive stories here. This was a breakthrough. The U.S. scientists have said that they've produced the first commercially accessible material that eliminates the loss of energy as electricity moves along a wire, which could mean longer lasting batteries, more efficient power grids, and improved high-speed trains. This is one of the team from the University of Rochester that announced this breakthrough. And what else happened? They created a new material, right, Chris?
Yeah, I think it's called red matter, which sounds pretty badass. I need me some red matter. But yeah, I guess, the good thing about it is it doesn't lose energy as it moves across,
right?
Wires and stuff. So that'll have a lot of good effects when it comes to, batteries, electrical energy and stuff like that. So I think it's a good sign for EVs, maybe.
Yeah, and I think that this can conduct electric currents without any loss at up to 69 degrees Fahrenheit and 145,000 pounds per square inch.
Yeah,
which is a lot lower than what your previous sort of requirements were for.
Yeah, for other superconductors, I think they had to be supercooled.
Yeah,
like negative something, like some extreme negative temperature. So with this, if you don't require, because if you think about it, in order to supercool something, that requires a lot of energy in and of itself. So ideally, this would save a lot of, it'd save in the long run.
Right.
Because you don't have to supercool it.
Yeah. Now, what's interesting here is that this material that they've helped discover was made from a rare earth metal called lutetium.
Yeah. And then they had to, I'll find it in the article.
Yeah.
But basically take two diamond tips and crush the matter harder with a force harder than the center of the earth.
Right.
It's some insane technique they had to do. I'll find it.
Yeah,
but
what concerns me is that if it's a rare earth metal, how much of this can then you scale? Like, do you only need like a little tiny piece of it, or do you need enough? And does that mean that we have to start?
I mean, if you want to,
is the run on lutetium gonna basically make this obsolete?
Yeah, I mean, if you want to scale it and use it at in wider applications, I would imagine you'd have to. You'd have to need a lot of it.
Yeah, like I want a scientific breakthrough where it's like we can make gasoline, or we can power a car with sand or water or things like that. It's like then if you know that you have enough, I suppose like we have enough solar energy. So yeah, we should have cars and vehicles powered by solar energy, and then have that ability to store that energy when the sun goes down or when there's a rainstorm. But yeah, I mean, maybe you don't need maybe you don't need so much of this rare earth metal, where you can then scale it to something that could be useful in the future. I mean, the problem with breakthroughs like this is this was created in a lab, and this was something that's we're talking years away from maybe finding the benefits from this. And then you have other scientists that then take this discovery and then build applications around it, and then you got to make sure that those applications are good applications and not used for evil. Of course, you're going to have both. I mean, and then you have to find a company that commercializes it, and then they do a startup, and then that startup goes to Silicon Valley Bank, and they're like, oh, that doesn't exist anymore. So now you see how I just connected those two stories?
Yeah,
it's impressive.
But yeah, I think you would mainly see this whenever it gets adopted, right? I think you would mainly see it in batteries. Because I think that's one of the biggest flaws of lithium-ion batteries, right? In all the EVs that we have right now.
Yeah.
Right? In your phone, the batteries in your phone, it's all lithium-ion is...
Eventually they run out.
Yeah, the loss of its charge over time. So...
And that's not even when companies are legitimately, purposely doing it. Like Apple got caught a few years ago of admitting that they intentionally drained the battery faster so that you would have to buy a new model.
Right. Yeah, and actually, let me cut back here. So if we look back at the article, let's just look here. The Rochester lab found that red matter could exist at 69 degrees Fahrenheit and 145,000
psi
pounds per square inch of pressure.
Do they explain how much that
Earth's core?
Yeah.
It's 1/360th of the pressure in Earth's core. Okay, so it's only a fraction of a fraction of what the Earth core is, but still.
It's not like me taking the two pieces and going.
No, but I mean, if you have to put your number in comparison to Earth's core, that's impressive. That's a lot.
1/360th is not that. That's not that small of a number.
It's not that small of a number.
It's a lot of pressure.
No, that's what I'm saying. Like the fact that they put Earth's core next to that. It's like, yeah, okay, that's a lot. That is about that's about a 10 degree Fahrenheit increase in temperature, and a drop to about 1/1000th of pressure compared with its predecessor from 2020. Okay. Yeah, no, it's crazy. It's crazy, and obviously it's a good thing. It's a good thing. We like new tech, and especially if it betters the stuff that we create.
Yeah. So, and as long as they don't use it for evil.
Yeah, I don't think so.
You don't think that this might get used for evil? Okay.
I mean, anything can. Anything can. You know what I mean? But it's.
All right. Let's talk about my favorite story of the week, which is Elon Musk he wants to build a Texas town. He wants to basically build his own town.
He wants to build some houses.
He wants to build a community of apparently the Wall Street Journal discovered that there's some pasture and farmland outside of the Texas capital of Austin. He wants to basically build a community to support two of his companies, the Boring Company, which is doing the trains, the underground trains, and then SpaceX is the other one.
Yeah, and they also did the flamethrowers, I think.
Okay,
way back when.
So. Whenever I see a story like this, I'm just reminded of the fact there's a Simpsons episode with this guy named Hank Scorpio, and he hires Homer to help run a nuclear reactor for him, and then it turns out that Hank Scorpio is a Bond level villain, like he's a James Bondish villain who wants to take over the world. Funny. Now, I found this story when I typed in Elon Musk Hank Scorpio, and this came out 5 years ago. So he jokingly admitted that he was this guy, which is, I obviously he's making a joke, but there are people out there that think that he's becoming a supervillain. And there was another story that came out from the Associated Press where they've noticed in Hollywood, the tech bros are now the villains. So that's a photo right there of Edward Norton, and he was the villain in Glass Onion. Oh, I don't want to spoil it.
Right.
He's the villain.
I mean, it's not really a spoiler. They make it very apparent.
Well, so the funny part is that as the villain, he was modeled sort of after an Elon Musk type of mogul.
Yeah.
So so you're like, that's an obvious example, but you saw some other ones, right? Like you were.
Well, yeah, I mean,
in Jurassic World.
Yeah, like you said, it's becoming a common theme,
like almost a trope. Yeah,
in all the movies where the bad guy is some tech mogul. But yeah, what was that last Jurassic Park movie?
Jurassic World. It was a horrible movie. You said
it sucked. Oh my god! So I know that's a topic for another episode. But you look at the villain, and it's like he's a carbon copy of Tim Cook.
Yeah, yeah.
Looks like him.
Yeah.
Sounds exactly like him, kind of like this low drawl, like, low note drawl. And it's like, wow. Okay, so that's how Hollywood is viewing villains now.
Yeah.
View them as like tech moguls.
And this used to be, we used to sort of idolize sort of this tech evangelist. And we talked about this on a previous show with Jack Gold when he was in, and whether or not the world needs one, because I think people are realizing that Elon Musk might be a supervillain. Like, I figured that with all that money, he should become Batman. Like, why not become Batman or Iron Man? Like, why are you emulating sort of the wacky kind of take over the world kind of guy? Like, I would take all my money and start building Iron Man suits if I was like this guy.
I mean, do we really think he's trying to take over the world? I mean, I just think that's just how he is.
Depends on.
I think it's just how he is. He's just, eccentric. He's trying to. A lot of times he does, to me, come off a little bit trollish. Like, he's just trolling the media. He's just trolling all of his haters and stuff like that. But I think honestly, I think he's trying to do good.
Yeah, that's what makes Trump too. Sometimes I think Trump was always trying to troll his haters too.
Yeah, yeah.
And that's why a lot of people liked him, because he was finally someone that stood up to sort of the Twitter mobs and things like that. So I think there's part of that with Elon Musk as well. But right. I think with Hollywood, they tend to roll in trends. But again, this is going to bring you back. There was a James Bond movie in the 80s where the villain was played by Christopher Walken, and he was a Silicon Valley type mogul as well. But this was before Silicon Valley became known as Silicon Valley.
Yeah.
So in the 80s, he was still a tech mogul, but his henchman was Grace Jones, and it was a horrible movie. Great song. It was View to a Kill.
Who was the James Bond in that?
That was Roger Moore's last one. It was right before they went to Timothy Dalton.
Did he have Roger Moore? I'm trying to remember.
Roger Moore was in The Spy Who Loved Me. He was in Moonraker, where he went to the moon.
Oh, okay.
And then they had that villain with Jaws with the metal teeth.
Oh, okay. Yep.
I know you're a younger guy, but like I was a kid when those movies came out. Like, so, the first one the first cool James Bond that I remember and liking was, I think, Pierce Brosnan. There was Timothy Dalton, Pierce Brosnan, and then Daniel Craig. So Daniel Craig is probably your James Bond, right?
Well, no, I actually.
Do you like those movies?
Yeah, actually. Yeah. So my brother has the complete box set of the James Bond movies, not up until Daniel Craig. So like we would watch them frequently.
Yeah.
Back in the day. When we were younger.
Yeah. So, obviously Sean Connery was the first one, or the classic one.
When you say James Bond, that's who you think of.
Right.
Most of the time.
Well, if you're a classic.
Right.
Yeah.
But
that's an interesting question as the life of this super spy evolves.
Which James Bond do you identify with?
Yeah.
Like that'd be a good question to ask. Like,
that's a really tough
instead of
question.
asking their age, okay, which James Bond which Bond actor do you identify with?
I would probably have to say Pierce Brosnan.
Who
was the one from GoldenEye? It was either
Pierce Brosnan.
Was that his first one?
I think so.
Because he looked so much like Timothy Dalton too. Like, I think GoldenEye, and I say GoldenEye because I liked the movie, And then it was also the Nintendo 64 version
Yeah,
of that
exactly.
game was incredible. Like that was just
It's legendary.
Yeah, I loved that game. That's my geek tech side. Anyway, so there's always been sort of tech bro villains, but I think that what we're seeing lately is sort of this negative perception of Silicon Valley as maybe these people aren't as cool as we thought they were. But there's nobody, it's like, well, you're not going to turn to government. You're not going to turn to sort of institutions now. I wish we could find someone we can trust and someone we can idolize. And maybe it's me. Maybe people just need to start idolizing me and you, Chris. I'll add you. You can be emperor of California if you want. So that's sort of the trendish thing that we're going to kind of monitor is, will tech bros
So now
gain their reputation of being cool again?
Right. I guarantee you, keep an eye out in the movies and movies to come about a villain who looks like Mark Zuckerberg. That would be hilarious. If they try to emulate
Have they done
Mark
that yet?
Zuckerberg. Well, actually, hold on a minute. No, the Social Network.
The guy that played Mark Zuckerberg was Lex Luthor in one of the Superman movies. Right?
Yeah, I know what am I talking about? Yeah, he was Mark Zuckerberg in the Social Network. But
Yeah.
I'd say I think the interpretation would be different today compared
Right.
to before then.
Right. Okay.
Because I think they kind of, like in the movie back then, he was a little bit neutral, a little bit of a D-bag,
Yeah.
how he started Facebook, right?
Yep.
But it really would be interesting to see how they portray him today. So I think it'd be pretty different.
We'll have to monitor that because right now my movie watching is still sort of Marvel sci-fi stuff, but it should be interesting to see if there's another James Bond movie or a super. Let's watch. Here's what we should monitor. The next Mission Impossible movie is gonna come out soon, right? Because Tom Cruise was making that in during the pandemic.
I think so.
I believe that if it comes out this year or next year, we will see who the villain is. I mean, it still might just be, in the Mission Impossible world, it's always the corrupt governments. Like that's always your standby is either a corrupt government or some maniacal world leader that's of random ethnicity now. It's like you don't necessarily want to pick on someone.
Yeah, I think it's called, the next one, Mission Impossible Dead Reckoning.
And we don't know who the villain is yet for that.
Yeah, I know no idea. But
Okay.
I think that's the one, if I remember correctly, Tom Cruise did this insane stunt.
Oh, yeah, he just jumps out of planes. Yeah.
This huge ramp right off like a cliff or something.
Yeah.
Insane.
Did you see Top Gun Maverick or no?
Not yet.
Yeah,
It's
I
on my
haven't either.
list. It's on my list.
I know. I've got a list like this long of all these movies I need to see.
I hear it's amazing. But I just haven't gone to it.
Yeah.
I want to see it.
We're too busy coming up with tech talk items.
Yeah, too busy with this. That's why.
And so we're sort of out of time here, right?
I think so.
All right. Thanks, Chris. Thanks for catching us up on the news.
Yeah, no problem.
All right. That's all the time we have for today's episode. Don't forget to like the video, subscribe to our channel, and add any comments you have below. Tell us who your favorite James Bond is. Which one do you identify with most? Join us every week for new episodes of Today in Tech. Have a great day, and we'll see you next time.